Hello everyone, this video is a kind of cause and effect scenario of what could happen in the next year or two due to the Russian-Ukraine conflict that is raging at the moment, and possibly any kind of Chinese conflict that will probably occur very soon. Right, so what we know is that we've got the world basically fractured into two or three, we can say, camps. Right now we've got Russia and China who are developing an alliance right now. They're developing quite a strong economic alliance, building new payment sectors and trade outside of the European and American monopoly. So because America, they make most of their money by forcing every other country to buy goods with their US dollar. That's how they can print money without hyperinflating. Because they print a lot more than any other country, and they do it because they export the inflation to everyone else. So every country has to have American dollars, otherwise they can't buy anything and they go broke. If we have two massive countries like Russia and China who start getting away from the American dollar, that means the demand for the US dollar decreases and it starts to weaken. And if that happens, America will plunge into a depression because that's the only thing the main thing they've got left in their economy. It's their money printer. So there's two ways this can happen. So let's say we have Russia and China and a few of these yellow countries, or say they're not going to trade in the American dollar anymore. America can say, okay, we're going to freeze all of your assets, your American treasuries. You cannot sell them. What happens then is America goes into a depression because they have a lot less money going around now. And if you do that, a lot of these countries are not going to trade with them. The other option is all these countries go away from the US dollar like before, but instead of America freezing it, they just allow it, and all these countries start dumping US treasuries into America. And this means America is flooded with a lot of money and they have hyperinflation almost overnight because they have a lot of money straight away and no goods because a lot of the trade will be disrupted. Alright, so the three camps we've got right now is Russia and China building this new economy outside of the American monopoly. And we've got the West, which is basically the cabal. And these people want the new economy of basically slavery, of the technocracy. So all these countries in green are the ones who are going the strongest with this great reset. And the yellow countries, all the countries on the sideline right now, they either have shown support for Russia liberating Ukraine, or have not denounced them at all, or they have very strong military alliances with Russia. And I've got Turkey here in grey because Turkey seems to be a dark horse. It is a NATO country, but it's showing a lot of support for Russia right now. So it could be siding with Russia. And Russia does have a lot of a very strong relationship with Turkey as well. So it could easily flip to Russia. So a lot of these yellow countries are sitting off on the side and they're just waiting. They want to see if what Russia and China, what they're implementing is successful. And if it's successful, they're going to jump ship straight away. Because all of these countries, they want to get off the American dollar as well. Every country does, because it puts every other country in a position of weakness against America. So if they can get off the American dollar and onto, for example, a gold-backed system, that means they have a lot more wealth, a lot more freedom, and they can build a lot more power and sovereignty for their own countries. So we just got another slideshow here, and I've just changed all these countries to gold because they're possibly going to be gold backed soon. And we can know this because especially Russia and China have been buying gold. Their central banks have been buying gold hand over fist, and they're not selling any of the gold they're mining either. So they've got a lot of gold stored up right now. You've got India and Brazil have been buying a lot of gold as well, and you've got Saudi Arabia, who have always known the value of gold. They were buying gold all the way back in 1971 when America first went off the gold-backed system, and America had to stop them buying gold because they know gold is wealth. So a lot of these countries are going to go to gold, which means they're going to have much freer economies than all of the West. So what we're looking at right now is the country breaking into two, and the Western countries will likely be the new third world country. So we'll be those poor countries all of the other countries go to visit because it's cheap. So expect that to happen, and expect groveling for all the rich Russians and Chinese if this happens, because that's a lot of what our jobs are going to be. For example, go to like Thailand or Vietnam or India, and you are swamped by people groveling trying to get your money. That could be our future, because the West is going broke. Well, it's broke already, and it's just going to be very obvious. And if all these other countries do go gold-backed, they're going to build wealth much quicker than the totalitarian system that's in store for the West. Alright, so we've got a few phases in what's happening right now. So we've got trade shocks in the commodities, which is exacerbating the inflation. The inflation was already there, but this is exacerbating it. So we're going to look at the cause and effect of the phases of what's going to happen. So phase one is the spending squeeze. When you have inflation, that means things you spend for all the stuff you like going to the cinemas, restaurants, that disappears. So for example, right now we've got on the left, you spend, for example, 40% on rent mortgage, 20% utilities, 25 and 20 on food, and 15 on discretionary. But the things that are going to go up are utilities and food. So they've only gone up 10% each, and your discretionary is already gone. And a lot of people are going to be in that situation. And there's going to be wealthier people who still have some discretionary, but the higher the inflation goes, the less people who do have some kind of discretionary spending. So what happens during this spending squeeze is the first things that disappears are the luxury items, because they're the most expensive. People won't buy new cars, they won't go on holidays, which you're not really doing too much now, or not overseas anyway. They'll stop renovating their houses. Most people renovate their houses on debt. If you are going through a spending squeeze, you're not going to get debt out, because that means you're going to have to pay back that debt, which does not help that spending squeeze at all. And electronics, people are not going to buy money on TVs, on their PlayStations and their Xboxes and their computers. All that is going to disappear. People will start just going to use their old cards and old TVs and so forth. Next things normally go will be the high-end restaurants. They'll start to disappear because a lot of people won't be going to them anymore. Cafes will be next. And a lot of clothing and cinemas. Cinemas are very expensive these days, and they're going to get a lot more expensive. And people are just going to go, nope, Netflix all the way, or we're just going to download them all for free. Last things to go, and they are fast food, thrift shops, and also things like Kmart and Big W, where you can get very cheap items. They usually do really well in a spending squeeze. So if you invest in those items, you can make a bit of money. And that's because those kind of shops, they cater to the poor sector of the population. And during a spending squeeze, the poor sector of a population increases. So that means fast food and all the cheap clothing shops and thrift shops, they have a lot more demand. They have a lot more poor people buying their stuff now. Because all the people in the middle class are now in the poor class, and they all go to instead of going to that fancy restaurant or to the really high-end clothing shop, they go to the cheap clothing shop. They go to the fast food shop. So all those places actually do really well in an inflationary environment. It's a good place to park your money if you want to make a few dollars. So let's have a look at the market. So we've got the real economy and the market. There's two different things. They're not related really at all. The market, what will most likely happen, and it's already happening, you have a commodity spike. And what's happening with most of the indexes, I just, drew what the S&P index kind of looks like. I'm not the greatest drawer. It is threatening to go into a bear market. It's kind of going sideways. It's not doing much right now. It can either go straight up for a melt up, or it can go down more. No one knows right now. It's in that middle stage. It hasn't really confirmed either way it's going, but it is threatening to go into a bear market. Doesn't mean it will. Okay, so that's what's most likely going to happen for a while. Commodities are going to keep going up, and most indexes are going to trade sideways, possibly one last spike up, or just go down slowly. So if you want to do some investing, the things that will be going down, slightly up, or up the most are listed here. So like I said before, the things that will be hit, all of the car manufacturers. So do not invest into any of the car manufacturers or retail chains, any kind of commercial retail sector. Don't buy any commercial real estate thinking you can rent it out, because a lot of businesses will be going out of business soon. Electronic manufacturers will start to struggle. It will take a little while because people love their electronics. So it'll be one of the last things they take away from their spending, but they will start to struggle. Tech stocks will start to struggle unless we go into a melt up. These things can go up if we get a melt up, but that hasn't been confirmed. And also crypto. And I'll put crypto here just because crypto follows tech stocks. If tech stocks are going down, it's likely crypto will go down too. A lot of people who love crypto will not like this, but that's just what crypto does. It follows tech stocks. It's not a safe haven. It says it is, but it doesn't act like one. Okay, so things that will slightly go up, precious metals. They should be going up a lot, but they are manipulated, so they're only going to go up a little. You're going to see them get slammed down continuously still. The big banks don't want them to go up, so they'll only go up a little. Precious stones like diamonds, they'll go up a little just because they're another finite resource. Copper, iron, they'll go up only a little, not a lot. They could go up a lot, but I've just put here just because they could suffer from demand destruction. If you've got inflation, you have less money to go towards building new buildings, which means less copper and iron needed and lumber. Otherwise, it could be over here in going up a lot. Fast food, thrift stores, like I said before, they'll go up because their customer base is going to increase because there's going to be more poor people. Uranium, coal, sugar are other things that will go up. They're going to go up quite steady for a while, I reckon. And one day will have their day pretty soon. Things that are going up a lot already, because we're already in this phase, are defense contractors, because, well, we got war threatening to break out. So a lot of people are running to the defense contractors. They think they're going to make a lot of money, and they probably will, because governments are building their war machines. Oil. What do you need for all those war machines, for your tanks and your planes? You need oil. So that's going through the roof. Natural gas is going to go up, mostly because of the supply shocks and just inflation in general. Wheat, soybeans will go up because of the supply shocks too. And also because of the supply shocks, nickel, fertilizer, and aluminium will go up. Because of fertilizer, other food products will go up too. But wheat and soybeans are the two big ones that really cover up most of the food products. Phase 2. So after the spending squeeze, straight away you have businesses starting to close because people are not spending money at them anymore. Because, well, they're only spending money on their essentials, their rent or their mortgage and their utilities. So you have a few shops who are thriving during this period, and I've said them before: fast food, thrift or pawn shops, money lenders do really well. That's why if you go to a poor area in any kind of country, you see money lenders everywhere. They cater to the poor people. They take advantage of them. It's not a good business practice, but they will probably thrive in the next year or so because there's going to be a lot more poor people. Cheap clothing stores will do quite well. Kmart, Big W, unless we have a supply shock with China. Then we just lose all that stuff in those shops, so they won't do well then. And major grocery stores will do well because people always buy food. So let's have a look at the market, what's going to have here when we're starting to enter a deflationary depression. Because it's a business closure, things are going down. We'll have a look at indexes. They will go down. They'll go down quite a bit. This is only the start of it, so you could see pretty severe corrections. It could be more volatile than this. You see it go down like 10% and then back up 5% and so forth. And it's going to be big drops because people are going to be getting very afraid of what's happening and they'll run out of the S&P index. And also, when you see this kind of thing happening, commodities are likely to go down too because it's fear. So everything gets slammed in fear. So you'll see commodities go down. So if you've bought into a whole lot of commodities thinking you're going to make money in phase 1, like I have in here, where commodities are going to go up, don't be surprised if they go back down for a little while. It's just fear-based trading. It happens. You can try and sell at the top if you want, or just ride it out and go for long term. Now, if anyone thinks the stock market is severely overbought and is in a huge bubble, have a look at the US Treasury market. It dwarfs the S&P index or the Dow, any other kind of stock market index. The demand for US Treasuries is massive because every country has to buy them, but most of the demand right now is from the Federal Reserve and all of the massive pension funds, which is interesting. That means it's actually not real demand anymore because the pension funds have to buy them through law. But during a market crash, US Treasuries are going to spike up most likely. And this is because it is seen as the safe trade. Every time in history, well, recent history in the last 100 years or so, when we've had a kind of market shock, people have run into the US Treasuries thinking it's the safe haven, and it has usually been the safe haven. The big thing that could ruin this trade is if you have Russia, China, and any other countries developing a gold-backed system pretty quickly. Because then, if that happens, you have more people running into gold as a safe haven and not as much the US Treasuries, because the world's going to be split into two. But in history, it's usually US Treasuries that have a massive melt-up during a market crash because it is seen as a safe haven. But just keep in mind, it could be split into US Treasuries and gold in the future. Alright, so let's have a look at how the market will react during phase 2 of the business closures. Same kind of thing. You have a lot of things going down. I've just moved like a lot of these commodities from here into just up a little bit before to down a lot. So copper, iron, they're probably going to go down a lot because everyone's like, no one's building anymore. Sell, sell, sell. That's industrial metals as well. So even silver could be hit a bit. Lumber especially, that will be hit, and the precious stones like diamonds and so forth will be hit quite hard because you only buy diamonds if you're wealthy. If there's a lot less wealthy people, there's a lot less demand out there, so they could be hit quite hard. Precious metals will be hit, but not as hard. Precious metals is going to be the big dark horse because, like I said, people could be fleeing to gold as the safe haven depending on how many countries are going to try and back their currencies with gold. But it's going to be pushed down mostly because you're going to have a lot of big banks wanting to push it down, so I'll say it will go down a little. Same with uranium and coal, it will go down a little, but there's still going to be demand for them regardless because they are cheap energy sources. Private housing will go down a little. It's going to start its decline around this time, but it only started. It's not going to do a lot yet because people hold on to houses for dear life. A lot of these people will not want to sell it yet. Things that are going up the most, like I said before, US Treasuries. US Treasuries will be booming at this period unless you have gold taking its steam. Same as before, the other kind of commodities that people have to get, they're going to be booming. And I've also put sugar, fast food, and thrift stores here as well. They'll be booming a lot. One thing you see in history is sugar does really well in periods of depression. It's actually usually one of the best performing sectors, if not the best performing in many other hard periods during market downturns, is sugar. It just always has been. People love their sugar. Phase 3. This is basically the same time as phase 2. It's just going to look at what else is happening. And this is when a lot of people are getting unemployed, when a lot of businesses go under, you can have a lot more unemployed. So that means a lot of more people needing welfare, and there's going to be a lot less tax revenue. So you're going to have a lot more money printing to pay for this or this increased welfare demand. And what happens then is you're going to increase the inflation. The inflation is going to start to get out of hand at this point because there's a lot less people working, there's a lot less products and services to buy, and there's a lot more money getting created. Alright, so we've got here, food and energy keeps increasing price. That's because everyone needs to buy these things no matter what. And many people are now really struggling to afford the basics just because of the printing's going to start getting out of hand, and unemployment is quite crazy. And if we look at the market, it's the same thing as before. What we're going to have is something called dragflation. Dragflation is when the economy goes down, but inflation goes up. If you looked in the 70s, that was stagflation, when the economy stagnated. It traded sideways and inflation went up. It's going to be worse this time because the economy is going to go down. So if we look here, we've got the S&P index. It's possibly going to go down quite a bit. It's going to be starting its big bear market right now. And the bear market could be huge. It'll be starting it at this moment, while commodities will be seeing another decent leg up. So it's good time to get back into commodities when you start seeing increased welfare dependence. That's when the commodities are going to start building again, because people are going to want all of these finite things. US Treasuries are still going to be going up because people are still going to be afraid. US Treasuries are still going to be the biggest area right now, most likely. Not commodities yet. It's all about US Treasuries because people are afraid. Phase 4. The real estate crash. Real estate's usually the last thing to go when you have this kind of crash, because people hold on to their houses for dear life. So commercials hit already before because people were going out of business, and all those landlords would have been hit there. So you would have no kind of investment in commercial, and now you have no investment in the housing sector. And the big thing is insurance companies will start to struggle, because you have all those business insurance, you have all of those housing insurances, landlord insurance. They're disappearing because there's a lot less people with businesses to get insurance, a lot less people with houses to get insurance or even want to afford it. And there's just a lot of people asking for an insurance in general. So insurance companies are going to start to struggle at this period too. And that's a huge sector in Australia. A lot of people are employed in the insurance sector. So we've got unemployed, fall behind on mortgage payments, which I already said. Landlords lose a lot of rental income, both private and commercial, so it's really struggling. And the sector's reliant on housing creators as well. You've got to remember, in Australia, a lot of sectors are built around the housing and the construction sector. All the real estate agents, suddenly, they just have no more money because they're not selling any houses anymore for big profits, either selling them at the loss or they're having to just give them to the bank, which means no money for the real estate agents, basically. So they're not going to be very happy, and they're used to the high life. They're going to get hit really hard, these people. Builders too, and all the other contractors, they're going to get hit really hard because people aren't employing them anymore. They don't want to build new houses. They don't want to renovate. They just have no work anymore. Conveyancers, same thing. Conveyancers are the lawyers who help with the paperwork just for the housing. That's basically the whole job, because our housing sector is so big, we have lawyers who just work in the housing sector. Their whole demand is basically going to disappear as well. So because all the houses are most likely going to the banks, that means a lot of the sectors around the housing sector are just going to disappear. So let's have a look what will be happening in the market at this time. We could see a deep recession up to 80%. The following crash could be between 50 and 80%, many people saying. So it could be massive. During this time, you're going to see people still fleeing into the treasuries and into commodities. Treasuries will still most likely be the biggest sector right now. It's just going to be going parabolic. It already has in the past, but it's just going to be insane. And that is, if you remember, only if you do not have the other countries really have a competition with gold, trying to back their currencies with gold. That's the only thing that can steal the thunder from treasuries. Phase 5. We already touched onto this with increased welfare, but right now it's just going to be direct free money. So this is when the governments get so desperate because a lot of people are unemployed, and they're like, oh, we need more money so people can spend it, so then we can create more jobs. That's what they've always said, and that's what they're most likely going to do. So they'll either do this with just money, like they have in the past, or this will be when they introduce their CBDC or some kind of debt forgiveness program where they'll be like, we'll pay off all of your debts, but you have to use this new currency and you have to take the vaccines every 3 months and you're not allowed to own anything ever again. And what people realize is that even includes your children. You won't even be allowed to own your children. That's what's in store for us. That's when they're probably going to install this kind of tyranny, when we get to normally the free money stage of this inflationary crash phase. And this is when a lot of people are unemployed and they're starting to sell their houses and they're panicking. And money just doesn't really buy anything at this point. It's either pure hyperinflation or to CBDCs. So at this point, what would normally happen? US Treasuries crater. So if you're going to CBDC, US Treasuries just don't matter anymore. No treasury in the world will matter who are in the countries that are implementing a CBDC. So they just crater, they just disappear. Commodities now go parabolic. They're just straight up, especially gold and silver at this period, straight up. There is just no stopping them at this period. And last is you have general stock indexes, for example, the SP index, they now go up. They don't keep up with inflation, but they go up. If you look at Venezuela when they had their collapse, their stock market went insane. But so did gold and the US dollar, because US dollar was the safe haven that replaced gold. So that's what we're going to see right at the end. Commodities, that's a parabolic run. That's when they just go insane. And so does the S&P index, but doesn't keep up with inflation. And US Treasuries finally craters after their parabolic move. So during this time, the only thing going down would be US Treasuries or whatever treasuries in the country you got, but mostly US Treasury because it is the reserve currency. So that's one that will be hit the hardest. Things that will go up but won't keep up with inflation will be stocks, precious stones. Remember things like diamonds and onyx and all that. They will go up because they're pretty, people like them, they're rare, but you have to be rich to afford them. So they won't be the most in demand. Other commodities will go up. Some will keep up with inflation, others will struggle. Energy will go up quite a bit as well. The main things that will outperform the rate of inflation is precious metals, because the trend at this point is, and has been for a while, but it's just very apparent at this stage, the trend is from paper money to real money. So precious metals is going to go parabolic. Possibly uranium, crypto, and sugar could also do very well at this point, because uranium is a cheap energy that a lot of countries are going to go into. And this doesn't have much to do with the inflation trend. This has to do with other trends that are just going to coincide. So it could be possibly doing really well. It's either here or over here. Crypto, big dark horse. People could be jumping into it again, or people could have given up on it for good by this time. Don't know. Sugar, like I said, sugar just always goes insane. It's just what it does. People love their sugar. It's in everything. And the demand for sugar is always crazy, and it just goes through the roof. Alright, so last thing we're going to have a look at is something we didn't talk about because it wasn't a part of the cause and effect phases, because it can be introduced or by itself without any cause and effect, and that is interest rates. Interest rates can just be introduced by the central bank without anything else. They just do it because they want. So what normally happens in a inflationary crash is that interest rates get increased as well. But they struggle to put interest rates up enough to stop the inflation. So we're going to use Turkey as a benchmark. And Turkey right now has about 50% inflation and 15% interest rates. So that's going to be phase 5 we're going to move to. And this is the kind of thing we could see. This is pure speculation. I have no idea what the central banks are going to do, but this is something that could possibly happen. For example, in phase 1, during the spending squeeze, we could see inflation at 10%. It will be actually higher, but that's just the inflation that the government's telling us. Most likely it would be about 20. And it could be like, all right, we're going to increase interest rates to 2%. So we could see 2% by the end of this year or halfway through this year. Phase 2, maybe at the end of this year or the start of next year, you'll see inflation, the official inflation at 15%, but it'll be much higher in reality. Interest rates could be at 4%. They'll be like, oh no, it's not high enough yet. At 4%, people are going to be really struggling to pay back their mortgages, especially with this inflation like this. It's going to be massive struggle. You're going to see people on their wits' end. And increased welfare, that's when inflation will start to really ramp up. But remember, phase 2, phase 3, same time, so kept the same numbers. But you're going to see it ramp up right here. We've gone from 15 to 25, interest rates gone up to 8. They've both doubled, and it's just not keeping up with inflation at all. And it will be a very quick transition from phase 4 to phase 5, where you start getting the free money. Because when you get a real estate crash, that's when people really start to freak out. And you could have inflation at 50%, interest rates at 15%, just like in Turkey. By that time, no one owns a house, no one can afford it. People are struggling to buy bread. And that's when you can have riots every day. Alright, so let's have a look at another thing that could be a spanner in the works. What if trade with China erodes? And this could be massive. And what it would do is basically just exacerbate things. The trend will stay the same, but just exacerbate it. So if we got the trend up here, we've got inflation increasing, we've got the 5 phases, and we've got interest rates increasing, it will just exacerbate it incredibly. So you could have 10 and 2, phase 1, China event, straight to 50 and 4. Straight away, inflation just shoots through the roof because we buy everything from China. If we have nothing in our shops, inflation goes through the roof because you got far more money chasing far fewer goods. And then you could possibly have 50 inflation still for phase 3. And it happens so quick, phase 4 and phase 5 could happen at the same time. And you could have inflation at 100%, doubling every year the official rate, which means it'd be even higher. And that's easily could happen, especially in America. And that's interest rate 20%. No one's affording a house then. House prices have gone, they're crashed. Alright, so there's just possibilities of what could happen in the next couple of years. We looked at the cause and effect of the phases. They're the main things to look at, especially in the real economy, so you know what's going to be happening. Also have a look at my ideas of how the stock market could react to it. And if you want to try and play it out, go ahead. Please don't blame me if you lose any money. I could be wrong. It is all speculation. Alright, thank you everyone for watching.